Hello, everyone. My guest today is JP Quarry. He has spent the last 17 years working on digital assets with a distributed team of top tier software architects, engineers, and marketing specialists, all built from scratch. Projects have ranged from SaaS to the development of peer to peer platforms. He's in what feels like everything in the space: create, buy, develop, sell, consult, operate. You name it, JP's done it. JP, ready to take us to the top?
Let's do it.
So let's work backwards. You have some news today, at least officially. I know the deal closed a while ago, but you've just sold your most recent company. What was the name of that company? What'd you do?
Ninja Outreach. Sold through Flippa because of Flippa, actually. The CEO connected me with a buyer he felt was a good match. And sure enough, within a short period of time, perhaps a week, we had a deal done. After a few months of due diligence and paperwork, we closed it out.
Well, tell me about the business first, and then I'd love to talk about the flip up sort of process. What's the company name and what did it do?
So Ninja Outreach allowed you to discover social media accounts so you could connect with them and have them promote whatever it is you wanted them to get out into the world, right? A search engine for Instagram, YouTube, TikTok, so to speak.
That's great. Now, did you have this idea and you built it from scratch with that remote team you mentioned in the introduction, or how'd you build the company?
So it's a hybrid. I acquired Ninja Outreach when it was a blogger discovery database or search engine, right? And it was just at the moment when social media was starting to really catch on, specifically the micro influencers. And I was, I guess, slightly early to the game in building this.
What year was that, JP?
2018. And built this database of Instagram accounts and made it somewhat easy to communicate with them. And we got lucky. Our traffic grew. We were slightly early, and it went well.
Now, JP, there's a lot of folks that have capital on the sidelines. They want to buy a SaaS company. They run into two challenges. One, finding a good one to buy. That's not like a 100x valuation, something ridiculous. And then number two challenge is if they get a deal they like and they actually close, making sure they run it where it doesn't go right into the ground. Like there's an engineer, a critical engineer that left and you can't log into the AWS console, for example. So walk me through those two hurdles. How did you find the business in the first place? Did you use a broker or platform? And then two, what were the first three moves you did after you acquired it?
So the discovery process for me is multi-pronged. One, I do scan the broker websites. My favorite two are, without a doubt, Flippa and Andrew's new play. So that is the discovery process is easy at this point because they come to me. But this particular deal I found in a slightly unique way, which was before Josh sold Barometrics, and they probably still have it. They have this open page, right? And on that page, they display SaaS businesses and their revenue. And I just started contacting the ones that I felt were interesting. And Ninja Outreach was one of them. After back and forth, I was able to acquire it. Now, mind you, it took me 2 trips to London and lots of calls to get them to sell this asset. It wasn't easy.
How much time between the initial cold email outreach and you actually getting control of the website, the URL, the code?
About a year.
Wow, that's persistence. Okay, I mean, can I ask the scale of the business when it was on Barometrics Open? How much revenue was it doing in 2018?
I'm going to guess it was doing $60,000 a month, but $20,000 was from SEO customers. And I had come from running an SEO agency for a decade. And so the first thing I did when I stopped providing services and consulting was promise myself I'd never do that again. And so day one, I fired all the SEO clients, which was a third of revenue. And so we went from 60 to 40 on day one.
Got it. So $40,000 a month in revenue after you say, hey, we're not doing any more of the SEO stuff. Now, there's a lot of people listening right now, again, that want to do this same thing. They want to buy a company. Can you let us in a little bit under the hood here? How did you value the business and what did the deal look like back in 2018?
So I perhaps value things slightly differently than most people. I ask myself, is this the highest and best use of my capital? Right? And I don't only look at other digital assets. I might compare it to traditional real estate investing and say, if I put the same amount of capital over in this other alternative asset class, what would I gain? Right? What is the timeline? How quickly are the underlying assets growing in valuation terms? And then I ask, how easy is it? The obvious stuff that most people know. Is it easy to run? Right? What's the overhead like? Is it a growth industry? Is there any customer concentration risk? Right? And so I don't like any customer to account for more than 2 to 5% of revenue. Before I bought Ninja Outreach, I had a juggernaut of a lead generation company in the assisted living industry, and I had 2 clients, and one of them was 80% of revenue. Talk about precarious, right? And so Ninja Outreach was somewhat easy to run. It had 3 developers when I acquired it. It turned out it only actually needed 1. And so 2 of them left on their own accord. I would say a year too late. I didn't need them from day one. And that was fortuitous that they did go. It saved a lot of overhead. And what was the other question?
A lot of people, they finally get the deal done and then they run the business into the ground on accident. So you let some engineers go. It sounds like increased profits. What else did you do to drive growth and cut costs?
So when we let go of the SEO clients, we let go of the SEO management team. I actually wanted to keep them, but because of the transition, here's a fun fact. The sellers understandably didn't inform the team that the company had been sold. And the team that was doing SEO was on a vacation together in Italy. And then one day they're on vacation and they find out they have a new boss. And they felt that they were surprised. Now, I completely empathize with both sides here. I understand why the seller would try and keep things under tight-lipped until it's done. It's absolutely the right thing to do. And I also understand the team's surprise and decision to go on their own way. I guess they felt they knew how to do SEO and they could just start their own agency, and they quit. Funny thing is, had they asked me if they could keep all the customers and get any new leads, I would have said yes. But they just quit and decided they were going to do their own thing, and I would have actually given them that $20,000 in revenue if they'd have been cool and just asked, and I didn't want it. So how do we keep it from falling apart? Well, when you buy a company like I do that's at least 3 years old, it's one of my prerequisites. You really don't have to do much to just keep it running, right? As long as you don't make a giant faux pas of a mistake, you're okay. Now, if you don't do much for too long, it will eventually start to fizzle out and die, as you know. And so the idea is to find what is that next big thing? How do we recreate ourselves in much the same way that Steve Jobs killed the iPod when he came out with the iPhone because it performed the same function. I needed to disrupt Ninja Outreach because as it stood, it wasn't going to last long as a blogger discovery tool. And that disruption came with really transitioning it into a social media discovery tool.
So before we talk about leading up to the sale just recently and then now what you're doing now with your time post-acquisition, can you take us back again to 2018? You did the deal. It was at $60K per month top line. You cut off $20K of SEO. It's doing $40K in true MRR. So call it like a $600,000 to $800,000 annual run rate. What did you pay? What personal capital did you put up at risk on the acquisition?
Well, I remember you told me I overpaid. And you're probably right. I did. I paid 1.2. And
did you get creative though? Did you limit the amount of cash you had to put up somehow?
No, I didn't. I've been very aggressive in a lot of my early deals. Actually, in all of my early deals, it was all cash.
All cash up front?
All cash up front. There was a $200,000 holdback for 6 months. That's it.
Yep.
And of course, I'm structuring my deals slightly differently now that people know that I'm good for it, and that I'm paying. And obviously, it's important for me from a risk analysis standpoint to hold some money back, or to have the seller hold some paper, or seller financing as they call it. And as a risk component, and additionally, just as importantly, it helps my money stretch further so I can acquire more deals simultaneously.
So was I right or wrong? Did you overpay?
You were right. Yes. And at that time, if anybody looked at it, they would say I overpaid. But that would be true of every deal I've done. There's no deal that you'd look at that I didn't sell for a profit, that in the beginning you'd have said you got a good deal, right? But I buy these assets not just on what they might be worth or valued at that time, but on what I believe I can grow them into, which really allows me to take pole position with the seller as as this market heats up, as you've seen, it's getting harder and harder to close deals. So the seller's going to work with someone who's got cash, wants to put up mostly cash, who's easy to work with, knows how to transfer the assets smoothly and elegantly, isn't going to hold any holdback or seller financing hostage on the deal, so on and so forth. Now, in hindsight, because I was able to exit at something north of what I paid, you might say, okay, yes, I overpaid initially, but it worked out.
Yep. Well, talk to me about growth. So between 2018 and the end of 2020, what were you able to grow the 40K per month in SaaS revenue up to?
It varies because, as you know, our churn rate was through the roof. And so sometimes we'd have a $70,000 month, sometimes we'd have a $140,000 month, and everything in between. Now, if you put a gun in my head and I had to tell you one month on average, I'd say 80 grand, let's say, right? On average.
Yep. So
but
you doubled.
Smaller staff. Sorry, go ahead.
No, you keep going.
But with less staff, right? Less overhead, less administrative burden, fewer tickets, fewer expenses. It was actually a really smooth operation. I'm not going to say I regret selling it. Let's just say I would have been just as happy to keep it as I was to sell it.
Yep. So you double true SaaS revenue from 40K a month to 80K a month. You also increase profits because you run a more lean operation. I mean, is it so again, more than double sort of the value of the business, in my opinion? Were you able to actually get the market to pay that price using Flippa? Did you sell for more than 2.4?
Yes. I think it's public. Is it not public on?
I didn't do a ton of research. If you can tell us though, how much did you sell it for?
I'm not sure if the contract allows me to say, and I'm not trying to be coy, I just don't remember, but it was more than double than what I paid.
Okay, yeah, let's just say it was only double, but it sounds like it's more. Let's say it was only double. So basically you make 1.2 million, right, over a 4-year period. Not a bad at all.
Plus the net profit over that 2.5 year, over the 30 months.
Yep.
It was a roughly 300% return unleveraged. If I had a company that was somehow called Founder Path, having lent me the money initially, I would have had a 2,000% return if I would have, come to you for the cash from day one.
Yeah, we're excited about this. It's one of the things we're working on is funding folks like you when you want to buy a company. Instead of putting up 1.2 million of cash yourself on a company doing 60 grand a month in revenue, we could have put up probably 300, 400 grand so you could juice your returns. We'll do more of that in the future, but let's keep it focused on you here for the last 3 or 4 minutes. How did Flippa help here? How did they help you get a 300% unlevered return?
It's not even, help is not the word, Andrew. Help is not the word, Nathan. They made the deal happen. So I had listed it on Flippa. Everyone called me nuts. The brokers that kind of shark through Flippa trying to hunt these types of deals to try and get the exclusive contracts, or reaching out to me and telling me they would get me what I wanted, and it would just, cost me 15% as a commission. And frankly, there's a place for brokers.
You're not a fan of FE International. I get it.
No, I'm gonna keep my opinion to myself. Like Putin says, what is it? Opinions and feelings should be kept to oneself. But let's just say that I do believe brokers serve a purpose for individuals who can't sell their own asset. 100%. If someone has the capability to start and grow a SaaS company, there are outlets like Flippa that don't require you to go spend 10 or 50% of your initial eventual outcome on a fee. Absolutely unnecessary, in my opinion, for everybody. Some people need it, some people don't. Now, how did Flippa make it happen? It's simple. The CEO saw the deal, saw that it was the most popular deal on Flippa in terms of watchers, traffic, and eyeballs, picked up the phone to, I guess, an outfit called TCM that was actively buying deals, and I guess they had communicated and already done a big deal on Flippa that year. Put me in touch with their CTO. Then I had a quick call with the CEO, and within, I'd say, 48 hours, we had a handshake deal.
And how long until close?
That was work. The buyer was large, and as you know, the bigger a company, the more red tape, the more legal, the more due diligence. It was very good learning experience. If you're a fan of Star Wars, let me tell you, You come in a patty one and you come out like a Jedi in training after you deal with TCM. They are professionals to the T. I would say start to finish 4 or 5 months.
JP, look, it's a hell of a story. You now got this cash. What are you going to do with it? You're going to go buy another SaaS company, go into real estate, buy Bitcoin. What do you think you're going to do?
You know, I lived in LA 3 years. Actually, we're both in LA right now. And I would have breakfast at the same place every day. And there was an old man there who's been in the picture business, as they call it here. They don't say movie business. They say the picture business. And I asked him one day after sitting next to him for 2 years, tell me about your industry. Teach me something. He says, kid, I'll tell you the only 2 things you need to know. 1, don't get into the picture business. And 2, never use your own money. And so to answer your question, I started a fund. It's called Silver Tsunami. We're raising $25 million. I picked up $500,000 of that actually right before this call from a new investor. I'm very happy about it. And the goal is to use that capital to give my investors a great return, or a better return that they could out in the market. I think this is the decade where our industry really kind of comes to its own, where institutional capital and retail investors start looking for opportunity in this space, and that's what Silver Tsunami is for.
Guys, JP, hey, we'll see what happens. Where can people find you, JP? Is it silvertsunami.com?
JP at Silver Tsunami or JP at constantclick.com. My profile on Flippa is open. They can message me through there. Those are the best way. JP at silvertsunami.com.
Guys, there you have it. Ninja Outreach doing $60,000 a month in revenue back in 2018. JP paid all cash up front, $1.2 million for it. I thought he overpaid, but he saw vision I did not see. He ended up using Flippa here just recently, past 6 months, and ultimately sold it for more than 2x what he put in, generating over a 300% return unleveraged. Now raising a $25 million fund to buy more SaaS companies to scale in the space and try and use other people's money to give them a great return like he just did at Ninja Outreach using Flippa. JP, thanks for taking us to the top.
Nathan, thank you for having me.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.